Welcome back to the channel. Today, we're diving into one of the oldest and still one of the most powerful areas of finance: commodities. Gold or oil, natural gas, wheat, copper, lithium. These raw materials quietly shape the global economy and influence everything from inflation to the price of your morning coffee. Whether you're a beginner investor or simply curious about how the world works, this video will give you a clear understanding of what commodities are, why they matter, and how people invest in them. And don't worry, no complicated math. So grab a drink, get comfortable, and let's break it down. Part 1. What are commodities? A commodity is a raw material or basic good used in commerce. Unlike a brand name product, commodities are interchangeable. 1 barrel of oil is like another, and 1 ounce of gold is basically the same wherever you go. There are 4 major groups of commodities. 1. Metals, like gold, silver, copper, platinum. 2. Energy oil, natural gas, coal. 3. Agriculture of wheat, corn, soybeans, coffee, sugar. 4. Livestock, cattle, hogs, dairy. These are the building blocks of everything we consume. Why does this matter? Because when commodity prices change, the effects ripple through the entire economy. Fuel prices affect transportation. Wheat prices affect food. Metals affect electronics and manufacturing. Part 2. Why people invest in commodities. So why would someone invest in commodities? There are 3 big reasons. 1. Inflation protection. Commodities often rise when inflation rises. If money loses value, people turn to hard assets like gold. 2. Diversification. Stocks and bonds often behave differently from commodities. When markets are shaky, commodities can act as a stabilizer. 3. Global demand. As countries develop building cities, consuming energy, expanding technology, commodity demand increases. Investors look at long-term global trends like population growth, electrification, renewable energy, and manufacturing cycles. Part 3. Gold, the original commodity. Let's start with the king of commodities, gold. Gold has been used as money and a store of value for thousands of years. Even today, central banks hold massive gold reserves. Why gold still matters? Safe haven. During economic uncertainty, people often flock to gold. Limited supply. Gold is scarce and costly to mine. Universal acceptance. Every country values gold. What makes gold prices move? Inflation, interest rates, currency movements, especially the US dollar. Geopolitical events, supply from mining and recycling. When investors feel nervous, gold shines. How investors buy gold: physical gold bars, coins. Gold ETFs, gold mining stocks, futures contracts more advanced. Each has its own risk and convenience level. Part 4. Oil, the lifeblood of the global economy. From transportation to manufacturing, oil remains one of the most important commodities on Earth. Why oil is so influential? It powers global transportation. It influences the cost of goods and services. Many countries depend on oil exports for revenue. What moves oil prices? OPEC decisions, countries that control oil supply. Global demand, travel, manufacturing, economic growth. Geopolitical tensions, wars, supply disruptions. Natural disasters, hurricanes, accidents, pipeline issues. Oil is famously volatile. Prices can swing hard based on news, political events, or even seasonal changes. How people invest in oil. Oil ETFs, energy company stocks. Futures contracts, commodity indexes. Oil investing can be high risk, high reward due to price swings. Part 5. Other key commodities. 1. Natural gas, used for heating, electricity, and industrial processes. Prices depend on weather, storage levels, and energy demand. 2. Industrial metals: copper, nickel, aluminum. These metals are essential for electronics, cars, buildings, and renewable energy. Copper equals wiring and power grids. Nickel equals batteries. Aluminum equals transportation and packaging. 3. Agricultural commodities: wheat, corn, soybeans, sugar, and coffee. Prices are influenced by weather, crop diseases, global food demand, trade policies. Agriculture is one of the oldest types of commodity trading. 4. New economy commodities: lithium, rare earths, As the world shifts to electric vehicles and batteries, demand for these is increasing rapidly. Part 6. What actually moves commodity prices? Commodity prices don't move randomly. Here are the major factors. 1. Supply and demand. If supply drops or demand rises, prices go up. 2. Geopolitical tensions, wars, sanctions, and political instability disrupt supply chains. 3. Economic growth. Boom periods increase commodity consumption. 4. Seasonality. Agriculture and energy often follow seasonal patterns. 5. Currency movements. Commodities are usually priced in US dollars. When the dollar weakens, commodities tend to rise. 6. Market speculation. Traders buying futures contracts can amplify price swings. Part 7. How to invest in commodities. There are several ways for regular investors to access commodities without needing warehouses or oil tankers. 1. ETFs, exchange-traded funds. Easy to buy and sell. Examples: gold ETFs, broad commodity ETFs, oil ETFs. 2. Stocks. Invest in companies that produce commodities. Examples: mining companies, energy companies, agricultural firms. 3. Futures contracts, best for professionals. These allow you to speculate on future prices, but come with high risk. 4. Physical commodities. You can purchase gold, silver, and sometimes other metals directly. But physical storage has security and cost considerations. Part 8. Risks of commodity investing. Price volatility. Commodities can swing based on small events. Geopolitical shocks. Sudden events can spike or crash prices. Leverage risks in futures. Futures can magnify losses. Storage and insurance costs. If you're buying physical gold or metals. Industry-specific risks, weather, environmental policies, and technology can shift demand. Commodities are the world's raw materials fueling economies, shaping markets, and impacting everyday life. Whether it's gold as a safe haven, oil driving global industry, or agricultural goods feeding populations, these assets play a critical role in the financial world. If you're thinking about investing, remember, commodities can offer opportunity, but they come with unique risks. Always research, diversify, and invest according to your financial goals. If you enjoyed this breakdown, don't forget to like, subscribe, and leave a comment about which commodity you'd like a deeper video on next. Thanks for watching, and I'll see you in the next one.